Thank you for joining us at xm.com for this Forex Preview video. We'll be having a closer look at the Bank of Canada policy meeting coming up on Wednesday. I'm Christina Marujos, and joining me today is Senior Investment Analyst Mario Sajikiriakos. Canada looks like it's going to have a busy month with the election coming up, but in the meantime, we have the all-important Bank of Canada meeting on Wednesday, followed by the nation's jobs report, which is out on Friday. Marios, one could argue, though, that the Canadian economy is in good shape, vaccinations are coming along smoothly, and we also saw the Bank of Canada slash its asset purchases in recent meetings. Do you think we'll see this pattern continue at Wednesday's meeting as well?
Hello, Christina. No, I don't think we're going to see that continue. I think the Bank of Canada is going to take a break in a sense, and they'll resume normalization at their next meeting in October. So let's take a step back. You are right, the Canadian economy overall is still in good shape. Vaccinations have been impressive. The jobs market has almost recovered all of its pandemic losses. Inflation is way above target, and oil prices remain elevated. Now, having said that, we have seen some worrisome data lately. So specifically, the economy contracted in the second quarter. So this is when lockdowns were still in effect. So it's not really that worrisome. However, we have seen some early signs that there wasn't much momentum entering July either, so in the third quarter. Combining the two, the data polls slowing down and the upcoming election, I think the Bank of Canada is going to stay on the sidelines for now. They might strike a patient tone, and the real decisions about the quantitative easing program will be taken at the next meeting in October, when the central bank will also have updated economic forecasts.
Now, with the upcoming election being one of the main drivers for investors, how do you think the loonie might perform moving forward?
Well, here's the thing. I think the overall picture for the Canadian dollar is quite positive. However, a lot is going to depend on whether the data bounce back soon and on the upcoming election. Specifically, I think the Bank of Canada is going to continue normalizing. They've already cut their asset purchases. I think they will do it again at the October meeting. And next year, they are planning to raise interest rates. Now, it's not just that the economy is doing fine, it's also the housing market. So the nation's housing market is on fire. And I think policymakers are worried that they might be inflating a housing bubble. So they want to remove the stimulus sooner rather than later. So the Bank of Canada might continue to taper, and that's positive for the loonie. The elevated vaccination rate for the loonie is also positive. However, I think that any real strength in the Canadian dollar might have to wait. So the Bank of Canada is unlikely to commit to anything this week. That might leave the markets guessing about its next move. And the upcoming election also carries a lot of uncertainty. Prime Minister Trudeau was looking to secure an even bigger majority when he called early elections, but since the elections have been called, his polling lead has evaporated and he's currently neck and neck with the Conservatives. In fact, he might not even be able to secure a minority government as things stand. So for the loonie, the best scenario would probably be another Trudeau victory. If that's the case, then government spending is going to remain very generous in an environment where monetary policy is being tightened, which is a great cocktail for a currency. But in the meantime, I think that over the next few days at least, we are likely to see some choppy trading in the loonie as the Bank of Canada stays patient and as the markets position for an uncertain election.
Marios, thank you for joining me today. This was a Forex Preview. Thank you for watching at xm.com.